Hello everyone, this is the pre-market report video for today 20th November 2023 for the Indian stock market in terms of Nifty and Bank Nifty. On Friday night in US, it's another successive third in a row confusing day. Economy wise it's all good, both new building permission and as well as new number of houses that started to build, all around 1.4 million for October, and both of them were better than the expected value and also better than the September month. Then regarding earnings, again we discussed enough in detail. In short, in last quarter, S&P 500 companies increased their earnings by over 6% against expectation of 1.6%. So both macro-wise and earnings-wise, no problem. But the problem now is whether Fed reached the peak interest rate cycle or not. Again on Friday, various FOMC members did the press conference and interview. For example, Vice Chairman Michael Barr said that he believes that they reached the peak interest rate, so no more rate hike, but the other FOMC members, Mary Daly and Susan Collins, didn't. They said they want more evidence to make sure inflation is cooling. So it's a very confusing stance from Fed FOMC members, which makes the US market also confused. For all those, US market on Friday played a waiting game, since this coming Wednesday there is a schedule for FOMC meeting minutes release, which investors expects to give some light on this interest rate worries. But according to me, I don't think it will provide any answer, rather it will make everyone even more confused. Above all, but on the positive side, not decisively, rather than at a snail pace, S&P 500 crossed and stayed above 4,500 mark for the 3 consecutive days. So from technical perspective, this week is very crucial in US because of no decisive crossing. If this whole week S&P 500 managed to close above 4,500 means, then the more probable scenario is to move towards 4,600. Just for info, the all-time high value of S&P 500 was 4,701. It reached this on November 2021. So if anyone bought in November 2021 means, then for the last 2 whole years they got no returns. Anyway, coming back to Friday, in the end, Dow Jones closed flat, S&P 500 increased 0.13% and Nasdaq mildly up by 0.08%. In case of US VIX, it also mildly decreased from slightly above 14 to 13.8. Coming to oil, there is no positive impacting news, all are against only, but still shorts profit booking made the oil to increase over 4%. Here, I am not convinced, but it's what the data is showing. Because of too much short build-up triggered the short covering after US additional sanction on Russian boats. At the time of this video, Brent crude is trading around $80.5 US per barrel and WTI crude is trading at $76 US per barrel. Moving on, regarding Indian ADR, only ICICI Bank closed negative, all other 3 closed positive, especially Infosys closed over 1% positive. Here in plain, banks looks neutral and IT looks mild to positive. However, if we calculate the arbitrage considering Forex and the monthly price movement, at present both banks and IT got at least 1% positive. Then about GIFT Nifty, at Saturday early morning it closed at 19,828, equating the 60 to 70 points premium, indicating a gap up opening of 30 to 40 points. So that's all about the global market. Let's see the India specific related info. On Friday after market hours, RBI released the country's economic bulletin, and as per that they said Indian inflation problem is not out of the woods. But on the positive, for this fiscal year, they expect inflation around 5.4%, which is good if we consider the target 6%. I don't know when they changed it, but on the economic bulletin, they mentioned India's inflation target as 4%. RBI always says that they want inflation between 4 to 6%. That's usual. If the target itself just 4% means, I don't know what they're trying to say. Anyway, that's the information. Second, SBI and SBI cards released the statement that this new RBI capital requirements change won't affect their profitability much, and they explained the rationale behind that. So from outside it looks okay, but let's see how market reacts to it, since because of this rules change on Friday SBI dropped almost near 4%. Finally, about institution, after 2 days of buying, again FII turned as net sellers. FII net sold for near 480 crore rupees with increased volume, and surprisingly on Friday, even DII also net sold for 565 crore rupees. Moving on, as per stock open interest, SBI Card, RBL Bank, State Bank of India, Aditya Birla Capital and IDFC First Bank got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, SBI Life Insurance, MRF, Granules India, Exide Industries and TVS Motors got an increase in open interest with a positive price close, indicating long build-up. As a summary, S&P 500 and Nasdaq still managed to close positive for 13 sessions in the last 15 sessions and increased near 10%. So the global momentum is not yet deteriorated, but because of this upcoming Fed FOMC meeting minutes release, we can say it paused kind of. However, Indian areas looks very positive, including both banks and IT. I mean, for now, areas are leading indicator, but there are days it did change during the Indian trading hours, and also GIFT Nifty is indicating the gap up opening of 40 points. Technically, it's not that clear positive, which we'll discuss in a moment, but from macro perspective, it looks positive. About the things to look out, first, early morning, Chinese interest rate decision is due. So that got the potential to change the momentum, particularly influence on the metal stocks. Here, their expectation is to keep it unchanged. Then, during our market hours around 12:30 p.m., it's Germany's wholesale inflation are some of the items we need to keep an eye out today. Finally, coming to technical, on Friday morning, Nifty opened gap down of 90 points below 19,700. Then within 15 minutes, it recovered almost all of its loss and moved above 19,750. Then in the next 45 minutes, it made an attempt to rebound and stayed above 19,800 but failed and also closed below 19,750. Thus, on the daily chart, Nifty formed a bullish candlestick pattern with a long upper shadow, which indicates two very important things. First, significant selling pressure at higher levels, let's say 19,800 to 19,850. Second, good support at 19,650 to 19,700. And if we compare the Friday's candle with the previous day one, then it forms the bullish inside bar candle. Thus, now Thursday candle low 19,625 and high 19,875 can act as the potential short-term breakout on either direction. So, if it breaks below 19,625, then the next support is at 19,550 to 19,500 level. On the higher side, in the last 2 days, it formed two long upper shadow around 19,850, indicates the presence of strong overhead resistance. So, Thursday candle high breakout above 19,875, then the more probable scenario will be passing above 20,000. The takeaway is near uptrend is good and intact. Immediate short-term range is between 19,625 to 19,875. And for the expected weekly range will be 19,500 to 19,875. If it breaks above, then that strong rally might extend to 20,000. In case of Bank Nifty, because of this RBI policy change on Friday, it was one of the biggest negative sector. It opened 500 points gap down, much below the immediate support 44,000 and moved further down and closed negative of over 1%. Thus, on the daily chart, it formed bearish candlestick pattern with a long upper shadow and minor lower shadow, indicates that sellers were the one that controlled the market. I mean, on Friday on Nifty, it's roughly balanced, but because of this seller control in Bank Nifty, which puts pressure on both index and made both closed negative. Another negative now is Bank Nifty moved below 20-day exponential moving average. Hence, the next strong support is at 200-day exponential moving average 43,300 and thus 43,300 to 43,250 zone will be the crucial. If Bank Nifty is able to defend means, then that could pave the way for a potential recovery towards 44,000 where immediate resistance is. So, the takeaway is immediate range 43,250 to 44,000. If 43,250 breaks, then that might increase and intensify the selling pressure, which will lead to further down towards 42,700 level. Moving on the weekly options front, 19,800 strike has the maximum call option open interest, followed by 19,900 with a meaningful new call option writing at the same place. On the other hand, the maximum put option open interest was at 19,700 strike, followed by 19,600 and 19,500, with new maximum put option writing at 19,100 strike, followed by 19,000 and 19,500. So the options data also indicated that 19,800 to 19,900 will be the resistance area for Nifty in the immediate term, with the support at 19,600 to 19,500 levels. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.